I'm Carl Mercurio with HealthCare Week in Review. We're here with David Cordani, who's the president of Cigna HealthCare, which is the largest operating unit of Cigna Corporation. Cigna is one of the nation's top managed care organizations. David, thanks for joining us.
Sure.
Well, you guys have some aggressive growth targets for 2007. You're guiding to 4 to 6% membership growth. Can you achieve those goals while maintaining pricing discipline?
Oh, we surely believe we can. We started 2007 with 4% membership growth already, so we've started with a strong beginning of the year, balance between our national account customers and our middle and small segment customers.
Anything, when you look at your groups, middle, small, I know that you're getting good growth across, national included. Any group that's more competitive than one of the others?
Probably the most competitive group as a segment would be national account employers. We've been able to make significant progress in the middle market for the past couple of years, and we define that as employers between 200 and 5,000 employees. Within the national accounts, though, those employers who are really looking to embark upon health advocacy and consumerism, getting their members more engaged, is really what our sweet spot is in the national account employer.
Great. What about on a geographic basis? Any markets more competitive than another on a pricing perspective? I know that the Blues, especially the not-for-profits, have been putting a lot of pressure on the for-profit companies.
It rotates every year in terms of what geographies are most competitive. We'd probably point to the southeast, specifically Florida, and a little bit of the northern southeast region as being the most pronounced competitive right now.
And is that the not-for-profits that are pushing that, or just the competition in general?
Both. In the case of Florida, it's both. In the case of the Mid-Atlantic, the northern part of the Southeast, a little bit acute to the not-for-profit Blues.
Okay. You guys have had some good gains in the consumer-directed arena. Maybe you can give us an update on whether that product line still has legs and whether it's still growing as rapidly as everybody expected it would.
Sure. We've had great gains in consumer-directed, and we feel wonderful about that. We put the consumer-directed HSAs and HRAs as an important part of our consumerism strategy, but not the only part. We've seen 2.5 to 3 times growth in that portfolio over the last year, and looking into 2007, we expect to continue to see growth. But important for us, it's a piece of our consumerism strategy, not the only part of it.
The other part would be what?
Health advocacy, so health advisors, health coaches, the use of incentives, even if it's not a fund-based program, to get the member more actively engaged to improve their health.
As the cost of health care continues to increase but at a declining rate, at least from a premium standpoint, is there less interest in the consumer-directed? Do employers feel they have other options?
Some employers do feel like they have other options. We use consumer-directed not as a fee-based or a cost-based play, but rather an opportunity to get the member more engaged and to start changing the conversation around improving health. And in that case, no, we actually see it as an opportunity for people to exhale a little bit and think more strategically for the future and embark upon a multi-year benefit strategy.
What's going on with cost? I think you guys were saying 7% cost increase for 2007, medical costs. Maybe you can break down where you're seeing the larger and the smaller trend.
Yeah, unfortunately, we're in a blackout period right now because of the quarter, so I can't go into the cost profile in detail.
Have you given prior guidance?
We have. Well, back to the November earnings release and then our year-end earnings release, there's detailed guidance on there on the cost outlook.
Right. Can you reiterate that at this point? Or?
We're actually not supposed to reiterate it in the blackout period, but it's on the public record for you.
Okay. Well, in generally speaking, can you break down a little bit what's more or less increasing in terms of your medical cost trend?
Well, we've seen just macro, a moderation in cost trend, a moderation through 2006, and a moderation in 2007. The primary drivers of cost are not pharmacy, as they have been in the past, but more outpatient and specialty services.
Mm-hmm. And finally, on the SG&A front, I know you guys have some room for improvement. What kind of initiatives do you have in place to get at that?
Yeah, we've embarked upon a multi-year approach there, so just speaking in general, a multi-year approach in terms of improving SG&A. So improvements in quality. More broadly, we're a Six Sigma corporation, so there's an opportunity for continuous improvement. Improvements in self-service, the use of web and portal activities for both providers as well as members. Targeted use of business process outsourcing as well are some of the examples of what we have in front of us.
Great. Thanks very much.
Sure.
From the Cigna offices in Hartford, Connecticut, I'm Carl Mercurio.